Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about 3 reasons why people lose money in the marketplace, or why you are losing money in the marketplace. And of course, we're going to give you the updates in the portfolio as well as the beginning of the week. So we will get right into it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And yeah, so we'll just get right into it here. But before we do, I just always have to show the proof, and that is right here, that we put $100 in on Sunday so that we have accurate numbers for today's video. And so today the market, well, the portfolio closed out at $4,105.78. We are up by $3.93 on the day, up 0.1%. For the week, we are up $17.71, up 0.43%. And for the 1 month, we are up $74.61, up 1.85%. For the 3 months, we're up $337.87, up 8.97%. For the 1 year, we are up $635.78, up 18.32%. And that is the same for all. So we'll get into our first position here, which is BCE, which is Bell Canada. Closing out the day at $57.71, up 25 cents on the day as of 2 p.m. Up 0.44%. That's 2 p.m. my time, by the way. We own 8 shares of this, total market value of $461.68. Don't know why I had my AirPods in. I took them out. Average price of $56.41 on this position. And it holds about 11.74% of the portfolio. Today's return was about $2, up 0.44%. But since owning the position, we're up $10.42, up 2.31%. And again, that is Bell Canada, ticker symbol BCE. Next position we have is Bank of Montreal, ticker symbol BMO, closing out the day at $113.09, down 53 cents on the day, down 0.47%. We own 5 shares of this. Total position value of $565.45. Our average price of getting in is $81.32, and it holds about 14.38% of the portfolio. Today, we are down $2.65, down 0.47%, but our total return since owning the position is $158.85, up 39.07%. Again, that is Bank of Montreal, ticker symbol BMO. Next position we have here is Bank of Nova Scotia, closing out the day at $78.18, down 13 cents on the day, down 0.17%. We own 7 shares of this. Total position value of $547.26. Our average price of getting in is $54.58, and it holds about 13.92% of the portfolio. We are down 91 cents on the day, down 0.17%. But our total return since owning the position is $165.21, up 43.24%. And again, that is Bank of Nova Scotia, ticker symbol BNS. Next position we have is Loblaws, ticker symbol L, closing out the day at $71.08, up 43 cents on the day, up 0.61%. We own 6 shares of this, total position value of $426.48. Our average price of getting in is $63.27, and it holds about 10.84% of the portfolio. Today's return was $2.58, up 0.61%. But our total return since owning the position is $46.85, up 12.34%. And again, that is Loblaws, ticker symbol L. Next position we own is Manulife Financial Corporation, ticker symbol MFC. Closing out the day at $27.40. We were up 4 cents on the day, up 0.15%. We own 17 shares of this. Total position value of $465.80. Our average price of getting in is $19.26. And it holds about 11.84% of the portfolio. Today's return was 68 cents. Total return since owning the position is $138.36, up 42.26%. Again, that is Manulife Financial Corporation, ticker symbol MFC. Next position we have here, and this is the position we are buying every week now for the month of April, is Royal Bank of Canada, ending the day at $116.49, down 1 cent on the day, down 0.01%. We own 5 shares of this. Total position value of $582.45. Our average price of getting in is $108.56, and it holds about 14.81% of the portfolio, down 5 cents on the day. But our total return is $39.64, and that is up 7.3% since owning the position. Again, that is Royal Bank of Canada, ticker symbol RY. Next position we have here is TELUS Corporation, ticker symbol T, closing out the day at $25.53, up 16 cents on the day, up 0.63%. We own 15 shares of this. Total position value of $382.95. Our average price of getting in is $26.25, and it holds about 9.74% of the portfolio. Today's return was $2.40, but our total return since owning the position is down $10.79, down 2.74%. And again, that is TELUS Corporation, ticker symbol T. Next position and last position we have here is Toronto Dominion Bank, ticker symbol TD, closing out the day at $83.45, down 2 cents on the day, down 0.02%. We own 6 shares of this. Total position value of $500.70. Our average price of getting in is $77.25, and it holds about 12.73% of the portfolio. We were down 12 cents on the day, but our total return since owning a position is $37.23, up 8.03%. And again, that is Toronto Dominion Bank, ticker symbol TD. In the cash portion, where our dividends go, where the money we put in goes, is $173.01. I got a lot of questions on where dividends go, and they go into this portion right here. So if you're wondering, it goes there. It doesn't go into your bank account. It goes into the cash account on your platform that you are using. I know some places do give you the ability to take the dividends and put them in a bank account, but you have to go see a professional for that. Because again, I am not a financial advisor. I'm definitely not your financial advisor. I'm just the guy on YouTube who is giving his honest opinion. And so before we get back into it, we did get a referral from Cyril. So we'll claim that and put it in the TFSA account, claim reward. That'll change the numbers. Good thing we got that all settled and recorded. Now we've earned $295 in referral. So thank you so much, Cyril. Hopefully I'm saying your name right. And that is that. So that'll be added to that soon. But let's talk about reasons why people, or even yourself, you might be finding that you're losing money in the marketplace, and there's typically 3 reasons based off of my experience. And again, it's just my opinion and my experience. I'm just sharing it with you guys just so that, you can, maybe look back and see maybe that's what happened or anything like that. So the number one biggest reason I think that people or new investors or even experienced investors lose money in the marketplace is because they don't understand market cycles. And what I mean by market cycles is when the market expands, so grows, or declines and goes down, obviously. And so a lot of people don't understand that there are market cycles, and a lot of things affect the markets. And the best thing that I can think of are 2, well, first, the only one thing I can think of for this one is 9/11. I was under 18 at that time when we experienced that tragedy. And I don't know if I'll get in trouble for talking about it, but that day when that happened, the market literally dropped the most it's ever dropped in history. And that was quite frightful for a lot of people. And a lot of people get scared and they literally sold all their positions. They didn't know what was going to happen. And they got a loss. That would be a realized loss in any of your positions that maybe you weren't up on. And they just sold because they didn't understand. Maybe, I don't know if it played a factor, the event that played a factor, but they didn't understand market cycles. Because this happens quite a bit. I mean, you look at last year, I don't know if I can say that, but I'm gonna bleep it out. But last year when the whole thing happened in March, that was a market cycle. A lot of people didn't know what was going on, and so on and so forth. And so, um, but what happened was people stayed in the market during those periods or these events that happened throughout time, and those who steadfast and just stayed and didn't do anything, their returns came back, and the market rewarded them for being steadfast and not being afraid, and they got their money back. And so a lot of the times it's the fear of selling, or the fear of the unknown and what's going to happen in the future that cause people to sell even when they're down on positions. So that's the number one reason, is not understanding market cycles, because it's bound to happen regardless if it's an event that happened here or event that happened there. Any type of event, any type of big event will affect the market for the most part. And so that is the first reason why I think people lose money in the marketplace. The second is emotions, emotional investing or herding, like a herd of cows or whatever. And that one is probably one that we hear about the most, because we experience it firsthand very quickly. It happens when you start investing in an expanding market or in a declining market. When you're emotionally investing, you're investing because that's what everyone else is doing. You're investing in a company because that is what they are doing, and that's just what you believe in. You're not doing your due diligence, and I'm not specifically pointing out the viewer who is watching this video, but everyone does it. We hear about something, and a perfect example is GameStop. As soon as that went up, there was a massive herd that went towards that. I'm not saying it was a bad idea, or even a good idea, to be honest. It was just a lot of herding happened there, and you hear about something that happened and a bunch of people went in not doing their research, and somebody was left holding the bag, which is a term that was coined, I believe, in the UK, for if you're stealing something and you were caught holding the bag. That's typically what it means. I think it was like the 16th century or something. I don't know. But anyways, side note. But emotional investing. And so another one I can talk about is the year 2000. I was still a kid in 2000. But in 2000 was the dot-com boom. Talked about quite a bit. This is when tech came on, a lot of times, and people found out they could make money on the internet, and there was these companies and the news outlets and everyone was saying, you need to invest in tech, you need to invest in this company. But the one thing they didn't do is their research. They didn't do the research. And when you don't do your research, you get burned, you lose money, because you don't know what the fundamentals of the companies are, or what they're doing or where they're heading. And a lot of people just started putting money into these companies that weren't really established at all, and really didn't have, the market share or even had a product to put on the market to create a profit. And what happened? It caused a huge bubble in the 2000, and we call it the dot-com boom, where it literally collapsed. And that's where I do believe regulations had to come in and really not control, but regulate that, because a lot of people got burned in that 2000 era when it was when it popped, in the tech sector. But now tech is freaking fantastic. It's stable, and I think it's a favorite among a lot of investors to invest in tech, because that's just where we're going in the world. But that is the second reason, is the herd mentality or emotional investing. We invest because somebody, a friend of a cat told me that I should invest in that, and I didn't do my due diligence. That is probably the gist of it. That includes FOMO investing, fear of missing out, because that causes hurting, not hurting, but hurting. And so as a second reason. Third reason is a lot of people think that the stock market is a get rich quick scheme, and it's not. I mean, you hear about people who do penny stocks or day trading, and I have nothing against those people. I'm going to say that right now. I have nothing against, if you're a day trader or you're a penny stock investor, I have nothing against that. I've invested in penny stocks. I don't do day trading. But it's these people that think that you're going to get rich so quick off the market, which sure you can, you absolutely can. But there is a small percentage that do. Um, and that falls right in with the get rich quick schemes. And and the thing is, you can't be the hare in investing. You got to be the tortoise, and you got to be steadfast, and you got to just take your time because it will happen. But you just got to keep moving forward at a steady pace. You have to have a plan. You have to, execute on that plan on what you're gonna do, and you have to be long term. You know, the the idea of getting rich in the stock market so quick is you're taking a lot of risk. I mean, if you're putting in, your life savings, and I did a video on this on penny stocks and why, yes or no to it. But, a lot of people think that you can get rich very quickly off penny stocks, which you can. Absolutely. If you're willing to take the risk that is attached to that. But to be honest, a lot of people, the fastest way to get wealthy in the stock market is just the index, the S&P and the Nasdaq. Um, just dollar cost averaging into that and invest in index funds. To be honest, that is the fastest way, in my opinion. And you may have a different opinion. And that's okay. We might disagree on some things, but again, this is just my opinion. But most of the time, a lot of people think that they can beat out the market. And to be honest, yes, you might be able to, but a small percentage. The majority of people that try to beat the market's return is kind of slim to none, in my opinion. A lot of people, I think there was, what year was it? Like I can't remember what year it was, but the market declined 9% in the S&P, and not 9%, it declined 4%, and the average investor declined 9% because they tried to outbeat the market. And it's very tough to outbeat the market. And I think Warren Buffett, talked about this as well, as, any well, the S&P will beat out most investors, and I might be wrong on that, but the S&P, you just can't, it's tough to beat. And so if you're not one to, care if you're going to beat the market, and you just want, your fair share of market return, go the index route. That's my opinion. And again, I talked about why I don't do ETFs and things like that, and why I index in some areas. But that is the third one, is people trying to get rich quick. It doesn't happen that way. And if it does for you, man, you are one of few, and I wish I was your friend, because that is pretty sweet. As for day traders, you guys got your own style, and I respect the fact that you can do what you do on a daily basis, Monday to Friday. It takes a lot of patience, willpower, I guess. And I don't know. I don't know any day traders personally. But I hear a lot, and there's some that are super successful. There's some on YouTube that are super awesome, and I respect them a ton for being able to do that. And so those are probably the top 3 reasons why people lose money in the marketplace. I might get a lot of flack for this one, but it is what it is. And so hopefully you guys did enjoy the video. It is a bit of a longer video this week. But hope you guys did have a great Easter weekend. I hope you guys have a great week this week. And again, I'm not a financial advisor. I'm definitely not your financial advisor. And yeah, we'll see you in the next one. Bye.